Welcome to Sales, Tax, and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales, Tax, and More, and today's co-host of the Sales, Tax, and More podcast, where we talk about everybody's favorite topic, which is of course, sales tax. Today, my co-host is going to interview me about whether software is taxable or not, and what factors we need to look at in order to help make that determination. So, before we get started, I want to introduce you to Ellie.
Hey everyone, it's really great to be here. We have a really great episode today. And before I get started, I want to do a quick introduction for Sales, Tax, and More. So Sales, Tax, and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax or related needs. So we do a lot of sales tax returns, registrations, consultations, research, and like our name states, more. So if you have questions about our services, please reach out and ask. We are happy to answer those questions, and we will give you many ways to get in touch with us. So Mike, I know we get a lot of questions about software and if it's taxable or not. And I think I know the answer here, but I want to see what you have to say about it.
Okay. So, Ellie, that's a great question, and you know what my favorite answer is. It depends.
Most classic answer we have around here. I knew it. So what does it depend on?
Well, first of all, as usual, it depends on the state because each state is going to look at software a little bit differently, but it also heavily depends on the method of delivery. So in most states, just about all states, if it's delivered on a tangible medium, like a disk or a thumb drive or, a floppy, or if you're going really old school, then it's going to be taxable. The next method of delivery is, downloaded electronically. And some states are going to tax this. Some states are not going to tax it. Then there's a method called load and leave. And that's where, someone comes on site there, they install the software, and then they take all of the tangible personal property away with them. So load and leave is going to be taxable in some states, not taxable in other states. And, more recently, we've got, remotely accessed software. So that's software as a service. So how it's delivered plays a big part on whether it's going to be taxable or not.
Why does it depend on the median so much, Mike?
Well, if you think back, historically, only tangible personal property was pretty much taxed. So as software started to become bigger and bigger, the states saw a lot of money there, and they said, how can we start looking at this? Because software, and looking at it and taxing it, because software wasn't really tangible personal property. I mean, it's not something, you can see, you can feel, you can touch, you can smell, it's a bunch of code is really what it is. So the states, some of them started saying, well, if it's delivered on tangible personal property, then we're going to say that that's taxable. Other states came out and they changed their definition of tangible personal property to include software. So a state like Texas is going to say no matter how the software is delivered, it's going to be taxable. Doesn't matter if it's downloaded, by definition, all software is taxable in a state like Texas. Where a state like California, if it's delivered on tangible medium, then it's going to be taxable. If it's electronically downloaded or load and leave or accessed remotely, then it's not going to be taxable. So, states are constantly trying to keep up with this technology and figure out ways to tax it. I always say that, states are not stupid. They're just a little bit slow to react sometimes. And, they've got to get their arms around this. So But that's one of the reasons why the method of delivery matters so much.
Okay, so is there anything else it depends on?
Yes, of course. It matters whether it's what we call pre-written or whether it's canned. And canned software, that's you can go in, you buy it off a shelf, or it's sold to the masses. That's generally going to be taxable depending on the method of delivery. Whereas custom software is often viewed more as a service. Someone's creating software specifically for you. And in most states, not all states, there was just a case in Alabama where they said, hey, software is software. It doesn't matter if it's custom or it doesn't matter if it's canned. It's all going to be taxable. So, whether it's custom or canned means pre-written, that has a major factor.
Well, this has been a lot of depends. Is that it?
Nope, that would be too easy. Each state has more depends. So some states, it matters whether or not it's going to be used 100% in a business. For example, in New Jersey, if something is electronically downloaded and it's used 100% for business purposes, then that's not going to be taxable. If it's delivered on a tangible medium and used in a business, that's still taxable. If it's electronically downloaded and it's used partially for personal use or all for personal use, that's still going to be taxable. So the method of delivery and whether it's used for business is going to be a big part. How it's invoiced. Sometimes you can take non-taxable software, combine it with tangible personal property, and in some states now the whole charge becomes taxable. So you got to look at how it's being invoiced. That can play a major role. Is the form of delivery pure? So a lot of people tell me that they have software as a service, but as we're going through it, there's some component that needs to be downloaded to the desktop or to the server. And if that's the case, then that can change the taxability. It's no longer remotely accessed. You're downloading something, and that can make it taxable. Whether it's sold outright, licensed, or sold on a subscription basis, all of these items can impact taxability. I could go on and on, Ellie, but at this point, I think you get the point. It gets very, very granular, and it's something that you really have to take a look at all of the different factors out there.
So to summarize here, I think what you're saying is that this is a lot more complicated than most people think. Is that correct?
Oh, absolutely. And, we haven't even talked about the sourcing of the sale yet. What happens if you're selling software and your customer is downloading it, but, they're downloading it all across the country? So how do you source that sale? What state's rate do you tax? And a lot of states allow what's called the multiple points of use tax. Multiple points of use certificate. And what this is saying is that, hey, we're being billed at this address, but we're going to use this software all across the state. And if you get that certificate, then you don't have to charge tax at all. And it's up to the customer to self-assess use tax in each state they're using this software. So it's something that can even get more complicated. And it's not just for the sellers of software. What happens if you're purchasing the software? Sometimes you'll say, well, use this address as my billing address, and thinking that you are, not paying tax. You may have, the billing address in a state that doesn't charge tax. This is a big issue when an audit is going on. They look not only at your sales to make sure that you're, collecting all the tax you should and remitting all the tax, but they're looking at your purchases. And large software purchases become a major problem. If they know that you're using software in their state and you haven't, paid sales tax on it, or if you haven't self-assessed use tax, that's an issue. So, whether software is taxable is not just an issue for software companies, but anyone who's using software also. You got to know where the tax needs to be paid and if you need to self-assess and remit that use tax.
Okay, well, I think that this is a pretty good example that when we say it depends, we really mean it depends. Mike, do you have any closing comments here?
Yeah, absolutely. So, as I alluded to earlier, the states are constantly trying to catch up to new technology, and they're constantly changing their taxability rules. So, this is not something that you want to set it and forget it. It's something you need to stay on top of, especially with downloaded software and with software as a service. So, you got to review it regularly. And, we've got a lot of great charts in our Salt Vault, which is a premium portion of our website. We're soon going to be coming out with a 2-hour webinar that provides 2 CPA credits that is devoted entirely to the taxability of software. So those are some of the resources you have. But whether you use our resources, this is something that you've got to stay on top of. So if you subscribe to your own research sources, that's great. Just don't think what worked, 3 years ago necessarily works today. So, whether you check on this annually or more frequently, that's entirely up to you. But we generally suggest that you do have to follow up on this. And in most instances, annually is going to be fine.
Thank you so much, Mike. And I just want to put out there that if you have sales tax needs, we do offer many solutions and services. You can reach out to me directly if you have questions. My email is emoffat, that's EMOFFAT @salestaxandmore.com. You can also visit our website at www.salestaxandmore.com. We offer a lot of webinars. A whole series of them are free that provide CPE credit as well. And we're really grateful to have you join us for our podcast, for our webinars, for you to get on our website and check out those resources as well. Mike, do you have anything else you want to say here?
Thanks, everyone, for joining us, and we hope to see you on the next episode of the Sales Tax and More podcast.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.